Well, Larry Goldberg is here because Larry Goldberg is supposed to be here on Friday night. So that's why that's why he's here. And because, well, everything that we talk about, Larry commonly has some amount of wisdom to share with you. And Larry, do you ever thank the people for the amazing comments you get on this channel?
I really should. I really should. I will do better in the future. I just, I keep rather busy these days. I think times will settle.
Well, they say nicer things about you than they do about me. However,
Yeah.
I gotta say, some of you all say some really nice things about me. Hopefully they're deserved. All right, Larry, let's start with, what everybody's going to be thinking about talking about is that we did crack that $200 barrier today. There's a lot of speculation. I've been speculating about it for a couple of days as to why we're having this run up in a time.
Why do you think we are?
All right. So my theory was, prior to talking to Bradford last night,
Yeah.
my theory was that the FOMO about 8.8 and or just generally speaking, the meta on Tesla is shifting to AI, robotaxi,
Right.
bots, etc. And therefore that was overpowering the negative news that we're going to get on Tuesday. That was my theory. But then Bradford rather, yesterday, he added in a little piece and he said he thought it was because stocks commonly start to go up when people think the company has hit a bottom. So he thinks people will think this will be the worst quarter. And from now on, it's up and to the right. So anyway.
Brad has a very deep knowledge about the market. I always listen when he speaks. So I think there's a lot of sense to that. I do think there's a component of realization of the whole new story. I think it is seeping in. We see it in, all these analyst comments on the bots and on robotaxi. It's clear that there's a component of valuation in the bot and in the robotaxi column.
Right.
And so I think there's a little bit of both playing. They see it's hit bottom because they understand that there's a new chapter being opened or a whole new book, as Elon would say. But on the other hand, I think they also do, think that we're not going to see these numbers again. And so you get this buy-in, as Bradford said. So I think there's a little bit of both, and they interact with each other.
Right, right. One of the things that I put out a video earlier this week, I think right after I talked to you, I put out a video, you probably inspired me, was all of the possible ways that we could actually get back to 2 million vehicles this year. Not least among those would be full self-driving being complete, and then full self-driving getting to level 4 or 5, and or, robotaxis actually, becoming a thing after 8.8. Even if that's just supervised, as some people think it might be. But those are just the things that have to do with the robotaxi. There was a bunch of other ideas that I had that could, any one of those could stimulate, bigger numbers in the second half than people are expecting.
I'm skeptical. Look, there can be a turnaround in Germany. I do agree. Germany's numbers have been very depressed, and that's for specific, economic reasons and tax regulatory reasons.
Right.
We had a very good season in the rest of Europe, particularly Italy, I understand, from Roland Percher. So I think, it's not an all gloom and doom. I mean, China's picked up quite handily and could pick up even further for all we know. There's been a bit of a, turnaround in the Chinese economy. And so there could be some coiled spring there in terms of demand. But, on balance, I think it's going to be tough to get there. 2 million is a huge stretch because we're probably about 150,000 short of the halfway mark. So we'd have to average almost 600,000 cars per quarter. That is a big jump, So, anything's possible. I'm not saying, I'll never say never, but I'll say hardly ever.
So, Larry, the other kind of brain wave I had this last week, my wife hates me to use the brain fart, but anyway, the other I had this, epiphany this week. I passed it by all of my other guests that I have each night. You haven't heard it yet. Maybe you did. Maybe you've seen, because I've talked about it over and over, but I really want to see your take on it because I really want Elon to hear about it if I'm right. And that is the reason for the sales problem this year is that the Cybertruck and the Model 3 refresh are Osborning the Model Y. And it turns out that the Cybertruck, I think, is also Osborning the Model 3 and the Model X. And the reason for that, the reason I believe all of that, if you haven't seen my other videos, is because I did a poll after the idea came to me, and 40% said that they would buy a Model Y if there was no Cybertruck, if there was no such thing as a Cybertruck. 33% they would buy a Model 3 if there was no such thing, and 20% said they'd buy a Model X if there was no such thing. Only 8% said they would buy a different vehicle if there was no Cybertruck available. Then I also looked at the timeline, the calendar, and when did the sales start falling off? When did we start to get nervous? And that was starting in September, right after the introduction of the Model 3 Highland. And then they fell off even more after the Cybertruck reveal, where we got to see the real stuff, how incredible the truck was. So the 2 million people that had reservations in could go, oh, no, I want that.
I mean, it's a plausible theory. It's a plausible theory. It's hard to gainsay that, but the numbers are quite small of the Cybertruck sales to date. But of course, people are expecting to get their reservation or are waiting for the Foundation series to end and get their reservation. So it's quite plausible.
You have 2 million folks that are.
Yeah, but you've got to explain away Europe and China. I mean, China, the sales, really.
So that would also be the Model 3 upgrade without the Model Y upgrade. And there's a big difference, Larry. Everybody I talk to that has ridden the Model 3 goes, this is a much better car than my existing Model Y. And so people that might be thinking Model Y even are holding off saying, no, I want the upgrade.
Yeah. I think that's a reasonable surmise. If there's one criticism I've had of Tesla is their lack of model introduction. They should have introduced models earlier, sooner. I mean, I was convinced by Gary Black's argument in that regard. And because it came from, some auto people who really know the market.
Right.
And it just made sense to me because we were at the very, the very height, or the very limit, I should say, of the Model Y TAM. I mean, we were beyond the Model Y TAM. The Model Y was eating into, cars that it had no right to eat into, given its pricing and its positioning in the marketplace. But it was doing it.
Yeah.
And so the chances of growth from that point were very limited. The chances of growth of the 3 are limited for the same reason. The X and the Y are halo cars. You're not going to sell very large quantities of them. In fact, sales are going to go down. If somebody can get a 3, even a 3 performance, it needs a specific buyer who needs an X, like myself.
Right.
And it's fair to say that, you know, I'm going to sell my Model X.
Yeah.
I haven't really got around to it, but I should. Maybe I'll give it to my daughter. You know, so I'm pretty. I'm not a great example, but not. You know, I'm there. I'm driving an X. Got my Cybertruck now. You know, I'm giving away my X or selling my
Right.
X.
Right.
So it's quite plausible.
Yeah, so then, Larry, the reason I even bring it up, because you know what I'm saying, on the one hand, oh, the numbers don't matter anymore because it's going to be all about AI and robots. And on the other hand, I'm saying, yeah, but it would be nice to have 2 million instead of 1.8. And so if we could get to 2 million, I think the way you get to 2 million the fastest is you bring out the model, the Juniper, ASAP. And I talked to Jeff about this about 3 weeks ago. Jeff said, not that hard. Maybe the metal would be hard, but not that hard to do the what do you call it? The suspension, the rear screen, the nice lights on the inside. You know, those things could be done.
Yeah. Look, you know, Tesla has been very reluctant to spend the money necessary for the product development. And it's a pity, because I think they missed a beat last year and they're missing multiple beats this year. And if they don't do something, if they don't announce and display something on 8.8, they're going to miss beats next year. So you can't just sit there and say, oh, we're going to be a multi-trillion-dollar business, so this doesn't matter. It matters. It matters a lot, because our capital, our investment needs are very, very significant. CapEx is going to be, you know, I did a chart on CapEx. I don't know if you remember, but it was way higher than the company projected.
Yes.
Way higher.
Yes.
And we're in that world now.
Right.
And so we have to, you know, get operational on this stuff.
So Larry, one of my theories about why the stock went up this week, early in the week when it was just beginning to go up, was the picture of the south end of Austin and those giant fans. That somehow that would have infected the mind of folks on Wall Street to say, oh, no, they're a serious player. It's one thing to say you're buying $10 billion worth of something. It's another thing to show that facility from the air. I mean,
talk is cheap.
That was impressive. Yeah. Look,
you may, you know, again, I hate to say it, Randy. I mean, you're on a roll. You may be right. It's part of the story, you know, that Gary Black is admitting to. It's part of the story of, you know, at first he said, unless there's I can see the product and it's blah, 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 I can't really assign any money to it. But now he's kind of assigning money to it.
Yeah.
And, you know, I think that they're finally setting up, when they actually see the physical, you know, factory going in, they understand the size of the investment. We saw this investment. We saw the chart of what they were going to do by way of number of processes last year. It was August, September that we saw the chart. We understood the implications. That was part of my CapEx analysis.
Right.
I show, you know, a very significant increase in CapEx that they are not actually guiding to, but it's going to happen.
Yeah.
So, yeah, you know, look, this is an investment can fail. This is a very high stakes investment.
Yes.
You know, it's what's going to drive FSD, but it depends upon processes that haven't been installed yet. It depends upon code that hasn't been run yet. But, you know, we trust that Elon will understand the engineering, will generate it, and will get it underway. So the Wall Street investors are beginning to understand that this means business. And by the way, the reason the South End was so late in development, it turns out, was regulatory approval.
Oh my goodness. Yeah. Well, we're going to
So
talk about regulations. You want to talk about that now? We had a big win in the Supreme Court today.
we did, didn't we? I mean, there's been one one disappointment in the Supreme Court rulings of the past 3 days, but by and large, we've had some really important victories, rolling back the administrative state quite significantly
Yeah.
in areas that I have been beating the drum on. You've only known me for a couple of years, but I've been beating this drum for a long time. It's been one of my, favorite themes. And, I didn't see Trump really moving the boom, now he did appoint these judges.
Uh-huh.
And by the way, one of the judges that was on the positive side, this ruling, this administrative state ruling, was a Biden appointee.
Oh, wow. That's interesting.
𝐤𝐤𝐥𝐚 Jackson. I mean, she's a Biden appointee.
Yeah.
And she's, a liberal judge. But she took the Chevron thing and just, it was such a bad judgment originally, and how it was allowed to stand for so long escapes me.
Yeah, so let's see if I know this is your specialization, so I'm going to try to explain to you what I think happened.
Okay.
And you tell me if I've got it right or wrong.
Yeah.
So my understanding would be that Congress passes a law, and for the last 40 years, they have passed laws that have been so broad, are so poorly written, are so inconclusive as to how they're supposed to be administered. I mean, just it was a thing people talked about. Congress is writing the law and allowing the administrative side to figure out how to actually implement it, as opposed to giving them clear directions.
So that's a problem.
Mhm.
And that's not the problem the court addressed.
Okay, so then the next stage would be
Yes.
that the administrative side decided that they should not only be administrating, but that they should also be judicial. So they were
Therein lies the problem.
They were setting up their own little courts.
Therein lay the problem. And, this judgment didn't go all the way. It didn't say you can't do that. What it said is you cannot administer a court where there's a civil penalty involved, where there's money involved.
Right.
And because they put people in prison.
Yeah.
Literally people in prison for using water on their land that is supposed to be wetlands, because they took this very broadly defined law, turned it into very, very tight regulations, and then administered that, using administrative courts. This whole idea of administrative courts is anathema to me. It's anathema to me. I hate it, because it puts power in the hands of the powerful.
Right. Yeah. And so that has been, as you said, at least partially eliminated, and might put more pressure on Congress to write their bills more clearly in the future, and or maybe even make decisions about whether there would be a court or not that would be part of the administrative approach. Would that be possible?
No, they would have to, well, here I talk as if I'm a lawyer. I'm not a lawyer, but here, I don't think that they would establish courts themselves. I think they would establish a law that would have to be determined by the court, by the standard, by the courts, under civil law.
Right, right. All right. Well, so we're glad about that one. Then we had another piece of news that I don't think anybody's reporting on yet, which is Jim Farley today might have done more for Tesla sales today than anything that's happened recently.
Don't you love that man? Don't you love that man?
With all the good stuff that's been happening, he said he's been a car man his whole life. His grandfather actually worked for Henry Ford I. Just loves, the sound of the rumbling motor and all this. He goes on and on in the beginning of his essay, which is quite a long essay. And then here's a snippet, though, that I thought was great. It says it wasn't government policies or political beliefs that sparked my late in career romance with electric vehicles. It's because I drive one. My Ford F-150 Lightning Platinum. It is astonishingly quiet and smooth. The effortless acceleration leaves you with a silly grin once you get the feeling back in your face. I mean, it's really well written, the whole essay.
Welcome, Jim Farley. Look, the guy is an auto guy, a real auto guy. He is he's not a bean counter,
right,
that runs an auto business. He's an auto guy, and he really understands. He gets it. And, you know, I love that guy. I think that he's a great guy. Look, I like the Ford Motor Company. My father, after the war, bought a 1949 Ford. It was, you know, the first post-war Ford. It wasn't actually the first, but it was the first real car. Right. It was a fantastic car. It was V8, all right, 3-speed, but V8. And man, that car was fantastic. And I even remember its registration number. I'm going back to 1949. TO1062. But it was a fantastic car. Yeah. And, you know, Ford, that was, you know, that 49 to 55, 56 was the, you know, the great years. Yeah, and then it went to hell in a handbasket. So anyway, I don't know how we can use that Jim Farley content. It would seem like Ford and Tesla would want to get that content out far and wide. Maybe we can get Jim Farley to do it as a video. I don't know, but it was so well written and so well done. I hope it gets viewed a ton. You've seen Jim Farley on television, right? Yeah. Yeah. He is such such an approachable, open person. You know, I really like the guy. You know, Sandy Monroe's had him in, you know, in his shop, and right. He speaks highly of Elon and vice versa. You know, there's great respect between those two, and you know, they're serious competitors. I mean, he's not a Mary Barra pen pusher from from personnel. Well, we also had Adam Jonas's 10-page love letter about humanoid robots and Tesla specifically. And I think his numbers, his expectations for the future were far too low. But the rest of his report, you know what? You may think it was far too low, but it doesn't matter. Yes, that's true. So high that here's the key statement in that report. You want the bottom line? I do. He said that analysts are going to have to add another tab to their spreadsheet. Yes. and really, this is speaking directly to what Gary Black talked about. Right. That we as analysts can't assign numbers to a product that we don't understand, you know, what the market is, what the costs are, what the selling price is, what, you know, all of that stuff. Yes. However, we are now beginning to see, he gave a bill of materials. By the way, the bill of materials was very favorable, much lower than I had it at. I had it at 100,000 from my work. And in speaking to some robotics companies other than Tesla, I got to 100,000. And that was probably 6 months ago. So it could have halved by now, or it could be, you know, that they're talking to China and China's much, whatever it is. They came up with a bill of materials of 50,000, which, you know, is very promising because we haven't got into scale production yet. And, you know, there's huge compression still to take place. And this is something that, you know, we can talk to, you know, the guru of supply chain, and he'll explain to us how we get down. But it's a good number. It's a very good number because it means that we are really getting towards, you know, a marketable product. So Larry, I don't know if you noticed, but much later in his 10-page love letter,
he said that he does agree with Elon that in
Mhm.
mass production, it will get down to $10,000
Absolutely,
and
absolutely.
sell for 20 or whatever they decide to sell it for.
No doubt about it, because when you're at this point in R&D and you
Right.
and your bill of materials down to 50,000, I mean, you're on the path.
Right.
You are on the path. The biggest issue is manufacturing those transducers, at a price that you can actually put 24 transducers into a bottle, whatever the number happens to be. Scott would tell us exactly the number.
Right, exactly.
And they mean to put in many more into the fingers. So those prices have to be squeezed down, and nobody knows how to go into, volume production like Elon. Nobody.
Well, that brings up another note that came out last week that I think went unnoticed. That was Bank of America's note. I think it was on Tuesday.
Of all companies.
Of all companies, Bank of America is like, these Tesla guys are so far ahead on cost of goods that they're unbeatable. There's no way anybody can catch them. They were talking like $6,000, $7,000 per vehicle advantage.
We're turning now from robots to vehicles. And they were showing just how advanced Tesla is in terms of vehicles. I mean, I agree 100%.
But I mean, I was just making the comparison in terms of their ability to manufacture at scale,
at cost,
lower cost than anybody, anywhere, anytime. And people often forget. Jeff brought this up again the other day. People forget that initial cost of development, the cost of CapEx, the building, how much tooling, et cetera, this is something people don't take into consideration in that final cost of goods, but it's huge. It's a big percentage of what, especially the first, say, 100,000 million units. All of that is got a heavy cost in the total cost of the car.
There's no doubt that Tesla is way ahead. I mean, here they are. And I will say one other thing. All of this angst about Tesla dropping prices is upside down. Tesla have to drive the cost of cars down below the cost of gasoline cars. I mean, it's as simple as that.
Right.
You cannot stay at that premium level, all the time, because you'll never expand the market. You'll never take over by definition.
Right.
You'll just be a specialty company.
Right.
So I think that we're on the right path. I think we really do need to, build more models, get some more models out. And I'm really hoping that 8.8 does that, because that will complete the story. We've got the bot thing coming. We've got FSD on its way. Very exciting stuff, extraordinarily exciting stuff. But we've got to take care of business, and business is the auto business right now.
Yeah, so I heard you yesterday, and I think you even mentioned this yesterday. You were on Spaces, and I was listening to that Spaces. You also, I think, even on my program Monday night, you're being very conservative about Cybercab.
Yeah.
And yet even your conservative opinion is not that far away. You keep saying, oh yeah, it's going to be a lot longer, Randy, but you're talking about this time next year, which is, 12 months. So
12 to 18 months.
12 to 18 months. Okay. However, I listened to the Tesla Bulls this morning, and they were all jockeying back and forth about, the timing of the FSD, or the robo taxi, if you will, the Cybercab. I mean, I don't know what to call everything now, the robo taxi network or the Cybercab, I guess, which is a specific, but they seem to actually come down on the idea. I think 3 out of 4 of them came down on the idea that there would be a supervised rollout where you and I would be able to use our cars as robotaxis and put a driver in the seat, maybe even immediately after 8.8, in order for Tesla to start getting the data, the servicing, the kind of knowledge of the customer, where the customers are going to want to be picked up and left off, it's kind of all the other stuff, the stuff that's not really related to making a great car and a great FSD, but rather is related to running a ride-hailing service. And they could do that by having supervised rides starting sometime shortly after 8/8. Do you completely poo-poo that idea, or do you think that's got some potential?
I could be wrong, but I don't think they're going to do that.
Okay.
I don't think they're going to do that. I could be wrong. It's been a popular concept. They've really, they've really pushed it very hard. But I don't see the prep for it. I don't see it happening. I could be wrong. Maybe I'm wrong.
All right.
Look, here's the problem. In order to have a supervised rollout, a supervised network, there's a heck of a lot of prep has to happen. And it really has to be done market by market. And it needs a whole organization and so on and so forth. And that organization is going to be different in a supervised network as it is in an unsupervised network. The unsupervised network requires a whole different organization. Because in a supervised network, each driver is responsible to clean that car. Each driver is responsible to charge that car. Each driver is responsible to house that car. In an unsupervised network, it switches.
Yeah.
There are a whole lot of different considerations. I don't know what the plan is. I just don't know what the plan is.
Yeah.
On the one hand, if they're really going to drive towards building an unsupervised network, then a supervised network just doesn't advance the ball very far.
Of course, now my theory on the supervised network would be that it wouldn't be a worldwide rollout. It would be Phoenix, it would be Austin, it would be a regional, local rollout, again, to gather information.
What information do they have to gather? I mean, you just have to look at the Uber operation to see what the information is in a supervised network. I mean, I don't understand the value. I don't see the value. And by the way, I don't think many owners are going to participate.
Well, the other day I was saying that if it was only 10%, you would still be talking about 600,000 vehicles.
No, you're not. In the United States, you're only talking about 250,000.
Yeah. No, I'm saying worldwide, you would have.
They're not going to do. They are not going to do network worldwide. Just disabuse yourself of that. They can't, because the cost of rolling out on an international basis is just staggering. They're going to have to do country by country. Now, I don't think they're going to necessarily do city by city, but certainly country by country. And by that, city by city is not a great idea. It's not a great idea, particularly, think about the one-way trips out to the countryside or out to another town. Is the average driver going to want to go out that far and then come back empty? I mean, this is not computing to me. This is just not computing. Look, Uber went through 5 years of heavy losses.
Right.
You're asking Tesla to follow that pattern. It ain't going to happen.
Okay. All right. Okay. So we also had, let's see, what else do we have this week, Larry? I'm forgetting. There were so many and I didn't write down the other ones. We had, I know we had Elon actually giving us well thought through pricing or stock price estimates for the future. We'll do 100 million robots.
How many trillions? Yeah.
How many trillions of dollars will that make the company worth? So that was kind of a new look for him. What did you think?
I don't like that kind of conversation.
Okay.
Doesn't appeal to me. I think it sets up dynamics which are not good, because if we don't hit that number, then people, point fingers at him and so on. I think he should keep out of share price prognostications. That would be my advice.
So almost everybody that currently owns stock in Tesla, even if it's only 10 shares, would do so well if the company becomes worth 25 trillion. It would be
25 trillion in 20, 30 years time is not 25 trillion.
Of course not. Of course, yeah.
But it's more than possible, and it's not likely. It doesn't have a high likelihood, but it is a possibility. It's not.
Right.
It's one of those possible
Sure.
futures, but it's not necessarily a highly probable future. I think the stock price can double, treble, or quadruple, or even quintuple.
Mm-hmm.
But if it's not going to go up by 100 times.
Now, Kathy says 2,700, and she hasn't counted Optimus in yet. So, and I know you think that Kathy's pretty smart.
Yeah. So, 2,700 from this point is, 13 times.
Mm-hmm.
If you add Optimus, you get to maybe 20 times, 25 times, but hundreds of times, that's where because once you get to 2, 3, 4 trillion in today's money,
right,
you're in the nosebleed section in terms of, current values of stocks. And then, you can add inflation to that for over time, but I'm talking in real values.
Right.
But if you're talking in the 10 times that level, yeah. Now it's no longer nosebleed. You're in the stratosphere, without a spacesuit on.
So the PCE came in today exactly as expected, which is a good number. We expected a good number. We got a good number. It's only one data point. Do you think it's indicative of where inflation really is right now? It's certainly not indicative of housing inflation, which remains high. Maybe it's indicative of groceries.
Does higher housing inflation remain high, or are we at a high level of interest rate and housing's not going higher?
Housing went up 6.5, the latest one this week, 6.5 year over year.
I'm not paying attention. Good grief.
Well, I have to. That's what I do now. I pay attention to all these things. Yeah, so housing is still extreme, very high inflation. Now, rents may or may not be as high, but last statistic I saw said 94% occupancy. So if you've got 94% occupancy, your rents are going to go up. There's just no getting around it.
I'm looking at the price of my house because I'm really considering, do I need such a big house? I looked at the price of my house. I was astonished to see it's gone up like 10% in the last year.
Yeah. I
mean, who's buying houses like that,
Well, Larry, the thing that everybody, because I have a big background in real estate, not personally, but I've had a lot of real estate clients, written a couple of books on real estate. One of the things that people forget is if you decide tomorrow to sell your house, you could buy that next time, even if you had a 50% mortgage on this one, you could take your equity and buy a house outright on your next house. And 40% of the personally owned homes in the country right now, mortgages are paid off. 40%.
Yeah, you've told me that before. I mean, that's a pretty big number.
And people are staying in their houses a lot longer. And people, as we know, are sitting on these very low interest rates, even if they still have a mortgage. So I saw a headline today. It said, has the housing market completely changed everything we know about the whole economic, situation? Because we have a recession in housing. When you have a recession in housing, that's going to impact things like Home Depot. You have, fewer people working in the housing industry. And then if you want to build more houses, where are you going to get those people? You don't have the skilled labor anymore to build that next set of houses, even if you decide you want to put down a lot of new lumber. But anyway, it's a big question. If there's been such an impact of this last, say, 10 years, that it's kind of changing a lot of stuff.
Yeah. Yeah.
You know, that's kind of my hobby horse, right, Larry? Talking about the once in a maybe 100-year change in all of the dynamics of the market because of the aging population, the wealth of the aging population. I saw another article the other day that was actually talking that the kids, the young people under 40, let's say, the kids, the people under 40 might actually start getting angry at you and me. Because we're sitting on this wealth, we're sitting on the houses, they can't get a house. You know, and they're like, what are we supposed to do? We can't get ahead.
Yeah, but a lot of us
boomers, those darn boomers.
A lot of us are passing on that wealth before we pass. A lot of us are.
Yes.
Our children are already, you know, garnering some of that wealth. People are paying off their children's mortgages. People are supplying their children with, you know, some of the investments that they would have to make anyway. So I'm not sure that the boomers are just simply sitting on the wealth. I think
no, they're not.
Yeah, so it's not entirely, you know, this intergenerational thing, I guess it's very real. I mean, I've seen what's happened to the very young people in schools today, you know, living with these fantasy theories about racism and so on. It's very damaging, and it does create intergenerational and all kinds of other frictions.
Yeah.
And it's part of the problems that we have in society and the frictions that are in society. But the truth of the matter is that, you know, the boomers and their children, I think, have got good relationships. I think it's the children of the next generation,
Z,
who are being, you know, dispossessed of their families. And some of that had to do with COVID. Some of it has to do with this whole, you know, critical race theory that they've been taught. So I know that's a political statement. We shouldn't be talking politics, but I see that as a real intergenerational schism.
Yeah. So, okay, the markets are at all-time highs. They flirted with all-time highs, and then they sold off really bad at the end today, or the NASDAQ did.
But you know, they're at all-time highs. But you know, I was looking today because I was attending some conference. The all-time highs are really concentrated in very few stocks.
Right.
And for that reason, if you look at the market, across the market, it's in terrible state. You know, you look at the old, you know, standards, they're not doing very well. What are doing very well are the Magnificent Six.
Right.
From which Tesla has been booted, but, you know, maybe. But I mean, other than that, so you have these peaks of, you know, concentration in very few stocks, and they happened in 1932 after the Great Crash. They happened in, you know, in typically in schisms in the economic environment.
Right.
And we're in that right now. So you can't say the market's at all-time highs. You can say a few shares in the markets are causing the market to indicate, you know, to look like it's at an all-time high.
Yeah. So do you anticipate a broadening out? Do you anticipate a sell-off of those Magnificent Six? Do you have any theories at all about where you think those crazy out of proportion things might end up?
I mean, it's anybody's call, anybody's guess how it will end, but it won't end well. Now, there are some mitigating circumstances. So one mitigating circumstance I pointed out to the presenter is that we have so many private companies that never went public.
Right.
Publicly traded, but not on the exchange and in these private markets. And they poo-pooed it, and then they did the numbers, and they said, well, maybe there's a case to be made. And those private companies are priced very high. I mean, you have SpaceX, it's valued at $220 billion.
It is now the largest private company in history.
I don't know that that's correct yet.
Okay, so I've read that that's true. I don't have any way to confirm it, but I did see that that was stated last week.
I have to be skeptical of that claim, but I'll have to do the research, because I'm just thinking about Aramco before it went public, just as a thought. And then, there's Cargill. I don't know what Cargill's valuation is. Anyway, the point is, it is valued at 220, and there are a huge number of these companies.
Right. Yeah.
There's Stripe, and there's just a huge number of these companies. So would the peak be this high at this point? I don't know.
Yeah.
And so maybe we're just missing a whole class of companies that is, companies that are on the cutting edge, that are highly valued, that would, reflect the same sort of valuation as these Magnificent Six, but are just not on the market.
Yeah, be interesting.
That may flatten the curve.
Maybe be interesting to know what percentage of total investment right now is in those private companies compared to what it has been in the past, as well as compared to the listed stocks.
Yeah, and that was the point made in the conference, because it's more than possible that there just aren't enough companies with a high enough valuation to actually skew this, because the value of these Magnificent Six are just
it's so crazy. Right. And yet fundamentally justified. It's not like they're not justified.
Well, in history, there's always been a leveling out in the history.
Right.
But you don't know whether the leveling out is the bottom coming up or the top coming down. You know what I'm saying?
Yeah.
So, it's like all of these economic things, it's just so variable. It's so difficult to actually pin down and say, because of this, that.
Yep. It is that. In fact, I've been struggling with that very thing of this last week, because there were so many impacts.
Yeah.
General economic impacts coming in from so many different directions.
Right.
I was like, okay, I got to just stop for a minute and kind of go back and look again. Because I don't know if you saw, Larry, that your canary in the coal mine has been copper. My canary in the coal mine has always been truck tonnage. And truck tonnage finally got a break last month, actually, month of May or April. I can't remember now. But anyway, whatever the last one they recorded, and it was actually up for the first time, like in 7 months. So truck tonnage being up could be a positive indicator that we might, again, one data point, need to see 2 or 3 more like that to actually see something.
Indeed. If the truck tonnage is up, that would undercut, this expectation of a
recession. Yeah.
Recession to come.
Right.
Because, if you look at jobs being advertised, there's an interesting chart that 𝐒𝐤𝐤, who's very bearish right now on the markets, on the economy.
Right.
And he's very solid analyst. Retail analyst.
Mm-hmm.
He showed a graph. I don't know if you saw it today, but
I did. No.
Software jobs being advertised.
Oh.
And it's like a mountain peak about a year ago, and now it's fallen
through the floor.
So there's another indicator that's kind of contrary. That looks like, we may be going through some kind of, I hate to say it, but we could be seeing the real economy pick up while, all the software stuff, the bubble bursts.
Yeah, I can't remember where I heard it the other day, but somebody was talking about the fact that we could see, like we did in 2000, it was the 2008, we could see more of the upper middle class, in particular in these tech jobs, be the first in the recession. That's when I started my consulting business, and I was consulting with people that had never had to worry about making a payment for 30 years who are all of a sudden, what am I going to do? How can I get some more people in the door? So yeah, it could come from the top again. And actually the 1991 recession also,
Yeah.
that was the Boeing, the engineers are the ones that lost their jobs, and it really hurt
Exactly.
the
Right.
economy. Yeah, yeah. Interesting. Well, Larry, I know you have places to go and things to do. So a great week, good news Friday.
Yeah.
Just doesn't get
And happy birthday, Elon.
that's right. Happy birthday, Elon. That's right. All right. Well, we'll see you on Monday. Looking forward to next Friday and Saturday morning when you and I will talk about Cathie Wood. Always love to hear what Cathie's got to say.
Don't forget, Tuesday. What's Tuesday?
What is Tuesday? Tuesday is the 2nd. Yeah, we're going to find out what
Production and delivery.
production and delivery numbers. Yeah, there's so many things
And
in July.
does the share price crash?
Yeah.
It may for a day or two.
It might. I've been warning everybody they should be careful that it may not be 100% already.
Priced
People
in.
may not realize how low it might actually go.
All right. Happy weekend.
Thank you, sir, and to all of you out there. It has been great talking to you.